Joining us now for more on this is CNBC founder and Target Media Executive Chairman Tom Rogers. Tom, great to have you with us. I think that the new data that came out just sort of reaffirms what we all knew about what was going on in the TV landscape. So I want to start off with you, with how you think about the media giants that have both parts of the business, the linear part of the business as well as the streaming part of the business, and how each should sort of weigh in thinking about the valuation.
Well, it's a great question, Melissa. Thanks for having me, and thank you for not putting me in the middle of the favoritism battle here. I think that what Paramount Plus and Peacock did in terms of being able to feed both the broadcast side of the equation and the streaming side of the equation is a very smart play. It's clear that linear television is increasingly becoming all about sports and news. It's why Fox is most buy-rated of the traditional media companies, because it is essentially a company now that is all about just sports and news. And on the streaming side, as we were talking about, that advertising is now going to be a critical part of all the streamers' business models. There's nothing that drives eyeballs like sports, and so they have a need to fuel that side as well. I think the fact of the matter is that you have to look at who lost here, and I heard the conversation on Disney and ESPN. To me, the big loser here is ESPN.
It's interesting. I'll just say it now to get out of the way. Tom is a stud, so that's out of the way. But it's one of those, we know these truths to be self-evident, number one. Number two, it was inevitable, I guess, but in October of last year, Netflix finally fell on hard times. Stock from 700 to 162. You know all about it. But can there be a rebirth here in Netflix? Because to the conversation we had, now it's done, you have valuation that's compelling, and the world seems to once again be lining up for everything that Reed Hastings is doing.
I think it's inevitable that Netflix recovers more and is ultimately viewed as the winner, because what isn't being factored in sufficiently, certainly in the case of Disney, but most of the traditional media companies that are pushing into streaming, is just how difficult the decline of the traditional business is going to be, how cord cutting is accelerating, how ratings are declining. And while sports rights is certainly a good thing to help stabilize ratings, the fact of the matter is when you're paying that much more for rights and you have diminished audience, that just squeezes margins against very tough conditions already. Netflix doesn't have to deal with any of that. And while people have focused on Netflix subscriber issues, they really don't have a subscriber issue. They reach 100 million households in the United States, more households than any cable or broadcast network has ever reached. Their issue, as you were discussing before, as Tim mentioned, is the monetization issue. How do you monetize 30 million homes that they're not getting paid for in that 100 million household reach that they have? And I think as they figure that out, you have an awful lot of opportunity, not to mention the fact that the engagement they have at 30% of all connected TV audience viewing compared to Disney Plus at 5% just gives them maybe not the pricing power people originally thought, but pricing power nonetheless when you have that much of the engagement share of the total streaming audience, which is now bigger than cable.
Tom, or should I call you Stud, as we look at the horse trading among some of the assets out there, let's talk about Hulu, because this is fascinating when you think about the players involved. And actually, who necessarily would want Hulu's business? And there's some question as to why Disney would even want that business. But what do you think is going to happen there? Could Comcast turn around and be a buyer? Or is this asset going to Disney at some point for at least $24 billion or more?
Well, I can make an argument for why each of them could use it strategically. I think that it was the case that there were different buying conditions when Netflix was at 700. Disney, I'm sure, using Netflix as a yardstick, would be much more interested in buying it when there's a comparison of Netflix at 240. And similarly, I'm sure Comcast doesn't like the idea of selling it when the leading comp is where it is. I think the thing that really has to be focused on with Hulu is it is the leading advertiser streamer. It is the one that has been out there before everybody else said that they were going to enter the advertising realm when it comes to streaming. They were the leading advertising service. And one of the things that just got no focus on Disney earnings is that for the last 3 quarters in a row, the advertising revenue per Hulu sub has declined. Now, that is a really bad, so this was before recessionary issues began to push down advertising revenue. So what is going on there that their ad revenue per sub was declining as Hulu was the clear leader, and now everybody else is going to have a ad tier as part of their offering with some great premium programming to compete with the Hulu inventory. That has to be taken into account as you think about it, not to mention that all the either all the NBC programming is going away if Disney buys it, or all the Disney programs going away if NBC buys it, and it will be a very different service in that regard.
Yep. Tom, it's always great to speak with you. Thank you.
Thanks for having me. And
Tom
I'm not
Rogers. Well, they think you are, so that's the way it is.